Great.
All right. Thank you so much, Sean. Thank you very much, everyone, for being with us for another class, another session with our RM Smart Investing on a beautiful Wednesday. And actually, can't believe it's the first week of December 2020. So here we are. Tonight, what I'm gonna speak about, and it's something maybe sometimes it's mystical. It's an indicator which is fairly new in Western world, and it's Ichimoku trading strategy. I've been applying for many years, and I used it, and it has been pretty beneficial to me. So I thought, why don't I share it with you? Hopefully, it's not going to be as mystical as it is with all the names that you will hear, and it will be something that you can put into use immediately. Um, One of the things, again, what I like to do with our classes is having an edge. The edge is what hopefully takes you to the next step and makes the just a little bit more profitable. And if you can do that a little bit at a time, that's how we become successful traders. So, as I mentioned, I'm gonna work on explaining what is Ichimoku, where is it coming from, what is the usage of it, how we can apply the indicators, and after that, how we can find candidates and how we can look at the charts and understand them. So basically, the Ichimoku Clouds, it was developed actually in actually mid 1930s by Goichi Hosoda, and he was a journalist. He was a young man who was reading all kinds of trading books, and everything he read, it mostly looked at the past. And he was very fond of he was very fond of candlesticks, and he thought, what can we do that we not only look at the past, but is there any way we can actually predict the future? And so he worked on that, and it, for many reasons, including regulatory reasons, it did not become public till 1960s. Actually, it became available in 1969 after he spent 30 years from 1930s to basically perfecting that. And basically, what Ichimoku, the full name is Ichimoku Kinkohyo, which translates into one look equilibrium charts. So that was the actual meaning of Ichimoku Kinkohyo. In Japan, it has been the number one technique because then it combines the candlesticks for as many years that I remember, and they use it quite a bit. So what does Ichimoku what does it do? It helps you to find the support and resistance. It finds out how to identify the trends. It also shows you where is the entry points, what is the exit points. And it also uses multi time frames. So it's not just good for days, although initially when Goichi started, that was his best usage was for daily. But as you will see, you can use it minutes, 30 minutes, 60 minutes. You can be a scalper, you can be a swing trader, you can look at the long term as an investor. So it applies in many time frames as well as multiple assets. It works great with indexes, with stocks, with the futures, but also with Forex. And it has a pretty good success ratio. And as you can see, when we look, I brought a couple of charts to compare, what we did 7 months ago, 6 months ago, and where we are now. So just to give you some indication. So let me start with a chart, which is this is the IWM, which is a chart of Russell 2000 ETF. They are basically 5 lines, and I call Ichimoku the past, the present, and the future. And there are not many indicators that they look at futures. I've used, talked about the like Fibonacci extensions. It gives us some ideas, but something like Ichimoku it gives us at least a glimpse of what could happen in the future. So basically there are 5 lines, and I will explain how we can how they are calculated, but I want to look at it visually. So basically there are the 2 lines. You see the yellow line, which is a tenkan-san, which is in English we call it the turning line or converging line. And then there is a Kijun-san, which is the standard line or baseline. So these 2 lines are the present. Now we go back, and there's this blue line, which is the Chico span, or is it, as we call it, lagging line, which looks at the past where we were. And then we have these 2 lines, which I call them Cinco span and A and Cinco span B. And what's in the middle of these 2 lines, that's the cloud. So this is the future. So just bear with me. So you have 5 lines, 2 are present, 1 is past, 2 in the future. So by looking at these lines, we want to see, first of all, how do we calculate these? Now, when you look at this line, first thing that you think about is it looks like a moving average. The same thing with this one. So basically, it is not a moving average. What it does, it operates similar way, but it's not averaging things. What it does with our turning line, this yellow line, it goes back 9 days. So you can see there are 9 bars. In this case, this is daily. So because we use different time frames, it goes back 9 bars, looks at what was the lowest point in that bar, what in that 9 period, what was the highest point. He adds them up together and divides by 2, and that's all it is. It's not like a moving average. You add every single closing price, and then at the end you divide it by the number of bars. This basically looks at the low, the high divided by 2, and you can see visually, I just want to put in this box, that you can see there's basically it's almost the middle of these high and low. So that's the turning line, and basically that's the fast line because it uses 9 bars. On the other hand, we have our standard line. What standard line does, it has a similar idea, except it's a longer term. It goes back 26 bars and looks at in that 26 bars and says, when was the lowest? When was the highest? And based on that, what is the midline divided by 2? And that's how you come with this purple line. So this is the fast line. This is the slow line. And basically, it has the similarity with moving averages in some ways, but it's calculated completely differently. So it's more of a momentum in a sense. Now, what this line is called lagging line. And the reason for that is all you have to do, whatever the price is in today's closing, which is December 2nd, it takes that closing price 26 bars back. So we are back in this case because it's daily. We go back 26 trading days. You can see it's exactly the same place this is. So this candle would have been representing this one. This one would be this one. So it just goes back, and all it tells us, where have we been and where are we now compared where we have been. So this price compared to 26 bars ago, we are way ahead of where we were again. So that tells us, well, there's a good momentum going. Now, it gets a little tricky here, which these are the span A, or our leading line, and the span B, which is the B line. And what this does, it basically, and I think it will be easier now that I can share this with you so you can actually visually see what we are doing. So the Tenkan-sen was the turning line. We call it conversion line, which you can see the highest and lowest divided by 2 for past 9 periods. The Kijun-sen was the standard line, the slower line or baseline, which was the highest point, lowest point divided by 2 for the past 26 periods. The lagging line was Chico's span, the lagging line, which is the current closing price, time shifted backward 26 bars. So now, now we have those clouds, so which build that cloud. The first leading line is we look at our turning line and where it is, and then we look at the Kijun Sen, which is our standard line. Those two lines, what the number is, we look at the average of those two, and we shift them to the future, which is 26 periods. So we basically average of these two lines, but we shift it to the future. So if you look at these two lines, if you look at this one and this one, this is today's closing. Now, what has happened in this situation, what we do is we divide this, add these two divided, but if you notice when we go, this is where we end up. It might be a little, so it might be easier to see it this way. So that's where we end up. Oops. I ended up going somewhere that I wasn't. All right. Let's, sorry about that. Sometimes my face covers the. So basically, that's how it's calculated. Now, when we go and we look at the second leading line, now this one is calculated a little differently. What we look at is we look at the highest and the lowest. So we go back actually 52 periods. So it goes back for 52 periods. We look at the, remember, we had a 9 to 26. Now we go back 52 periods. The highest point, the lowest point, divided by 2. And then what we do, now we shift it again for the 26th period. And now if you're an uptrending, now this will be the lower part. And so it is kind of momentum. You can see this is more of a more recent and this is more of a past. So that's how these calculations are. And that's what it's called the past, the present, and the future. So basically that's how these calculated. Now, how do we use these indicators? How do they work? So just to give you a simple idea, when our turning line, which is our fast line, and we have our standard line, which is a little slower line, when they're decidedly above the cloud, that means we're in a positive trend and it's a bullish stage. When they are decidedly below the cloud, then we are in a negative stage or in a bearish position and the trending low. So what happens by looking at the clouds, we also look at the future, we see that slope and which way it's going. And that's how you know if the trend is going to go up, is the future looking bright, or are we flat, or are we down? And we will look at it in details through our charts. So the buy signal is reinforced when the faster line, like almost like a moving average crossover, crosses above, but all the prices are above the cloud and the prices are above the trend line. So that gives us a bullish indication that we can, could be a purchasing place, or if you are in the position, we will continue with it. A sell signal is the opposite. If you're under the cloud, if the fast or the turning line is crossing the standard line, then that gives us a negative indication. So how do we interpret all the signals? Basically, the signals, there's different ways you can interpret them. When the price crosses the cloud, when the prices cross the turning line, again, like a moving average or support and resistance, when they cross the standard line, when the lagging line, which is very interesting, you look at the lagging line, when it crosses the cloud, it gives us a strong indication of the changing of the trends. And I will show you again in a chart going back and forward how we can again interpret that. When the cloud spans cross, so let's say the clouds, and you will see again, I will explain how they, when there's a twist, the top line of the cloud is goes and crosses the bottom line of the cloud. So that's called crossing. The turning line crosses the standard line, and we mentioned about the crosses, and that one really works on scalping on very short term. So it's almost again like a we have the dead cross, golden cross with the moving averages. This works similarly, except I have found that it only works in a very short time frame, not in a long time frame. And the price and lagging line, they touch the cloud. So when they do touch the cloud, it could be a support, a resistance, or basically change of trend again. So we will also see it in our charts. Also, I've mentioned that now the thicker the cloud, the stronger the support and resistance will be. And we will look at that as well as far as how to interpret that. So let's look at the bullish signal. So what happens with the bullish signals is if the price moves above the cloud, and I always, as you know, I always like to have two-bar confirmation, whether it's the moving averages, whether it's a breakout. I like to have this two-bar confirmation, and it will show it in the charts. That's is bullish. It's a good time maybe start buying. Or when the price is above the cloud turning line, the standard line, that gives you the strength, knowing that this is a strong trend. You should stay in the position or maybe add more positions. Or the turning line, again, we have talked about that this faster line crosses the standard line from the lower part and it crosses above. And that tells you that it's almost like a golden cross, basically tells you there's a strength. And this is, again, good for more scalping. I mentioned find that in the short term, it works well. The lagging line crosses the cloud. The cloud edges are actually, as mentioned, they're very good support areas. So you can actually predict whether you can put your stop losses or where you can actually put your purchase orders. The cloud span crossing signal trends changes. So when I mentioned about the clouds, and again, I will show you how when the A line crosses the B line, that tells us there's a change of guards. And if it was bullish, now turning bearish. So the bullish clouds have the colors are blue and green usually. The negative clouds, when there's bearishness, the trend is down. They usually are like red, sometimes yellow. It all depends, or purple actually. So that which basically, again, red and purple, sometimes or yellow, they turn to green or blue. That's bullish. So what time frame should we use if you want to be trading, and how long is your objective? And this is important, and the reason I show this, again, we will see it in charts, is if you're planning of holding something for days, so you will look at the hourly chart, and it's good only, I'm sorry, if you're looking at, again, just for a few days, you look at the hourly chart, that's 16-minute, and they are good for 3 to 4 days. So if you want to hold something, if you're looking at a trade for the next 3 or 4 days, then you want to look at the hourly chart. And that's when you look at the signals. If you're very short and you look at the 5 to 10-minute chart time, because you're going to hold it only for 2 to 4 hours. So it's good only for 4 hours. So that's how your time frame selection works. So if you were going to hold something for a few weeks up to a month, then you should look at the daily chart. So that daily gives you the signal for next 20 to 30 days, and because you're going to hold it for weeks. If you're going to be a long-term investor in these days, it's like it translates to 6 months, then you will look at the weekly time frame, and that's, you want to hold on to it for a few months. And then if it's for a few years, then you have to look at the monthly if you want to hold on to it for 2 or 3 years. And usually for me is, this is the area, if it's, I'm going to hold it for a few hours, if I'm doing futures market, if I'm going to hold it for a few days, maybe some options, or I'm going to have some stocks I want to buy and hold it for 20 or 30 days. This is a time frame that I will basically emphasize. So when you're looking at your Ichimoku, as I mentioned, it works in all kinds of time frames. You want to look at all of them, but just choose which time frame you want to emphasize. So again, if you are in a very short term, then you can look at the daily chart, but the 5 and 10 minute signals are what you're looking for. If you want to scalp and if you're in it for ticks or 1 minute, and if you're using um, 233 ticks or 512 ticks, and your goal is you're going to be in it only maybe 30, 40 minutes, that's when you look at the ticks and minutes for scalping. I hope this is clear, and I think it might be helpful when I share like a chart that I have. So this is from my trade station. So when I have my Ichimoku set up, basically I have them set up for monthly, I have them set up for weekly, I have them set up for daily, then I have 60 minutes, I have 30 minutes, and I have 10 minutes. So basically I look at, I want to see, overall, what is the trend? What is as far as um, how the cloud is looking as far as the momentum and trend. And basically also what I want to make sure is, are we in a bullish trend? Are we above the cloud? How is our standard line and turning lines looking? And what happens is, if I am looking at, let's say I want to get into an investments on a daily basis, and I'm looking at holding on for a few days, then I want the confirmation by looking at the shorter term. So let's say I have a positive um, indication on a daily basis. I will wait to see how the 60 minutes. So if the 60 minutes, for instance, is below the cloud, I wait for it to, let's say, cross the cloud, and that way, or cross the turning line, then I get the confirmation. If the cloud is positive and I want to get more, so then I want to have something that in the 30 minutes and 10 minutes is mainly like a 10 minutes is confirmed. So this is the visual what I have. I also have a trade station. I do have set up um, my radar screen, which I look at all the holdings from the futures. I look at the forex. I look at all the stocks, and I have my daily chart. So what happens right off bat, I can see if our trend is down. Are we in a, as far as our cloud, is it blue? Is it yellow? What are we looking at? So I'm very visual. So right off bat, I can see if there's any candidates that I should pursue further, or if the holdings that I have, how do they stand? So basically, the radar screen on TradeStation allows you, on Thinkorswim, you have the same thing. So let's put it into use. Let's do a little study. And what I thought, we did have a brief class in one of my presentations on May 2nd, or May 8th, actually. May 9th, this is a May 8th. So on Saturday, May 8th, May 9th, I did talk about Ichimoku briefly, and I introduced a few charts. So I thought, let's look back when I introduced the charts and I went over them based on my interpretation, and look at it now, see what happened almost 7 months later. So I think hopefully this is helpful, because what happens is maybe we can interpret what is going on with all these lines. So as you can see, this was the closing price. This is the cloud, which is the cloud computing ETF, which we've been positive. It was at $18.71 on May 8th. Now, what we have, this is our turning line, which is in blue. So this is from stockcharts.com, which is a free service, and it is a great for the charting tool. They do have the Ichimoku Clouds. This is the full Ichimoku Cloud indicator. So you can see the cloud was above its turning line, which is the short term. Also above the standard line, both of these lines are above the cloud. The price is above all these. And the lagging line had crossed actually above the cloud. So basically what had happened is once you cross, that's another confirmation that the lagging line is above this cloud. That's positive. This is positive. This is positive. This is positive. Obviously, we ignore the volume right now, but I can see there was a big buying. So I'm going to just emphasize on Ichimoku for now. The other good thing was, remember, we're moving this to 26 days, and what is happening in the future, this is telling us the trend in the future is upward. So the cloud, again, we pushed to 26 bars forward. It shows that we crossed from red to green in the future, and that tells us there's a strength in this movement. So that is positive sign. So that was one. The next one was the Peloton, which it was more of again, it was a COVID play at that time. It was getting a lot of interest, and the price for Peloton was at $43. So it had gapped up the previous day, and we had an inside day kind of. And what happened here, again, we see the turning line, the standard line, they're both above the cloud. The price is above the cloud. The lagging line has crossed the cloud, and it's up there. And basically, again, we look at the future, we see there is a cross from red, it will cross from red to green, and the momentum will continue. So the trend is up. Okay, I hope that's clear. So we're looking at the trend, the future looks good. We are positive, so we won't sell anything at this moment. And basically, that looks positive. The third one I had also shared Microsoft, which it was kind of similar, though, so I didn't want to bore you with. There were 4 charts. I thought to share something a little different, and we had talked about UGA, which was a gasoline fund, the ETF, and our thought process was with people not flying too much, they start driving, and because of driving, there would be more demand for gasoline. But also, this is the middle of all the oil debacle, if you recall. There was just so much supply of oil, crude oil, and here we were with the UGA. So this is a little different now. What is happening here is we just got inside the cloud. It's positive that we broke that kind of a resistance inside the cloud. It's positive that we are above the standard and turning line. So far, those are 3 positives. But the lagging line is way below the cloud. So that's not positive. This is more of a neutral because we are inside the cloud. Now, one thing about the cloud, it can be could be resistance, could be support when you're inside, so this can come back, and most of the time the lower edge becomes your support. And basically, the thicker the cloud, the more resistance, and it's harder to break it. So if you're in a bullish momentum and you're inside the cloud, the thinner it is, the easier to break it. So what that means is, as a support, let's say we were below here and we hit it, it's a lot easier to go above the cloud when it's thinner than when it's thick like this. So what are we looking at the future? Right now, basically on May 9, or in this case, May 9, it was a May 8 closing, there's a lot of thick liquid or fluid here. So there is a resistance. So it's going to be a little difficult, but you're kind of a neutral to bullish right now because we have broken above these 2 turning and standard line. So with that in mind, if you don't mind, I'll look to today and let's where we stand, and I'll start with the cloud. So remember, we looked at the cloud right around here. This is May 2nd, if you recall, right? I mean, May 8th and 9th. So this is where we were. It's about 1850 or so. And as you can see, the momentum was up. As you recall, we said it was green, and it just kept going, staying above its standard line, stayed above the turning line, and it kept going. Now, when we got around here, basically what was happening, now we're getting flattened. So when you're here, it tells us you're going to get flattened. So basically, although we are still above the cloud is turning red, it's thinning, and you can see we've been just really, it has been in a consolidation. So one of the things I added to this, which I use, is the ADX, which is the average directional movement index. And what it does, it shows me the trend, how strong is this trend, the momentum. So if the trend, this black line, is above 20, or ADX is above 20, then you have a trending market. So we were staying trending. I also use DMIs, which is, in this case, the color could be blue. Usually it's blue and red. This case is green. The green is the positive, the D1. That means the momentum is on accumulation. So if the trend is going up, and also the DMI is positive and it's going up, that means there is a positiveness on the buying and accumulation side. If the trend is going up, but the red is also going up, that means there's distribution. So we are in a quiet moment. There's not really any direction, and you can see there is no direction, and the cloud is telling us the future looks very flat. So the cloud for now, it seems like it has run out of steam. So if you want, looking for some opportunities somewhere else, this might be a good time, maybe lighten up. As a matter of fact, I mean, I can see like a little head and shoulder, maybe if I'm just looking at some classic, but you can see that the cloud has thinned, we are flattening. So we are really back and forth between this standard and turning line. Let's take a look at the Peloton. Now, Peloton, again, it was right around here. We gapped up, if you recall, and we were at this area we just closed. And at that moment, again, we were above the turning line. The interesting thing is, like, again, like moving averages, once the prices or the bars close below or above one, they like to go kiss the other line. So if the turning line, if you break below turning line, it likes to go and kiss the standard line. Now, if it would have broken standard line, it would like to come and use the support of the span A, or the top of the cloud. So the top of the cloud is basically is your support all this time till it breaks down. So if you were a buyer of Peloton and did not use any other indicator, you just used Ichimoku from May 9th, basically you would have stayed in it because it did not violate your the sell signals. You can see the lagging line always stayed above the cloud. You can also see that our momentum was up. We also have green above so that there was buyers in control. The future had the upper trend, and you can see that, every time we came close to that standard line, it acted as a support, and it just kept going. Now, what has happened when we were like around here, you can see the cloud has flattened. So the future looks that there's not a lot left again in Peloton at this time. Although, again, we can see that the ADX is below 20, so there's not a lot of momentum. You see a lot of more consolidation. We are inside the cloud. There is no sell signal at this time. The sell signal will happen. Initial sell signal happened when we broke below the standard and turning line. we found support in the on top of the span A of the cloud. We are inside. If you so we will be out of our positions, but we will not short this. We are not going to buy puts on Peloton at this time unless we close below this cloud, the span B, and with 2 bars. So the confirmation will be we close 1 bar and then the second bar, then I probably will go short. I buy put options or do some bearish vertical spreads. Okay. And hopefully at that time also, we'll see there's a momentum as far as coming back. So the directional trending strength. So we are above the 20. So we will pretty much at that time, we will be convinced that this was the right call, because what happened was we are below the turning and standard line. We are below the cloud. The ADX is going positive about over 20. The red DMI is going higher than green. And also this lagging line, if it comes and crosses the cloud, that gives us another sell signal. But we are not there yet. So it's more of a neutral to, for now it's like another hold. The last but not least was the UGA. This is where we were inside. As you can see, it came down and it dropped and it held the support at our turning line and the lower edge of the cloud. And after that, it stayed with the turning line. Again, this is a very thick cloud. So what it did, it stayed within it and then came down again. There was this resistance and then it broke above. So right here, I got my 2 bars. I would have been long, but as you can see, we've been really flat. And that's where the ADX started losing its momentum. So there could have been, this would have been not a very profitable, maybe a small profit here, because as you can see, it's been just a flat. I mean, you don't really have a big sell signal because of the big moves happen here. And I know we played the UGA at that time. We bought it since April, I think, and we held it. And every time like this, that's where we gradually get out. So, but I thought I'd share with you how we use the cloud from past 7 months. Hopefully you have some understanding of the cloud and how it works. With that knowledge, you will ask, there's tons of stocks out there, holdings out there, the Forex and different commodities. How do I find candidates? So what I thought I'll share with you, one of the free ones, and I have mentioned that if you go to stockcharts.com and under the charts and tools, if you go a little to the right side, you go down, there's something called reports and more. It's wonderful. Again, stock charts, I'm one of the big fans of them. There's a predefined scans, and you can find any, if you're in point and figured, there's scans for that. The 52 weeks high, there's any type of a technical indicators, such as, if you want to use MACDs, RSI crossovers, everything. I just thought in order to fit it here, so they do have a candlestick pattern predefined scanning, and they look at all the as far as the signals and patterns, which is, again, candlesticks are my favorite as far as the styles go. So I use candlestick more than lines or bars or point and figure, which I think we should have a class for that in near future, because it's wonderful to understand them. But what they have, they actually have, they separate New York Stock Exchange, NYSE, NASDAQ, Amex, over the counter, the Toronto Stock Exchange, also Toronto and Vancouver and London. I mean, they give you all kinds of different screen and different right, as far as the stocks that you could hold from different exchanges. So we go down here, it says Ichimoku patterns on some green. is this, if it turned red, do you look for, as far as basically, do you look for going above the cloud? So in a nutshell, I thought that might be helpful, and hopefully that's something that will help to understand. So with that in mind, how it was useful, and I think, Sean, if we can um, stop the recording and go to the Q&A if it's possible.
Sure.